In fact, we also have Ravikant Bhat who joins us on the phone line. We also have Sanjeev Bhasin on the line with us. So Ravikant, let me start with you. What do you make of the numbers? So gross NPA has improved, net NPA has improved, the net interest income has increased by 27%, which is highest in many quarters. The deposit growth is strong. So overall, what do you make of the numbers?
The numbers are quite strong, I would say. As far as our estimates are concerned, I think the NII number is pretty close to what we were estimating. We were at 28%, and if I heard you right, the NII growth has been 27% plus. So I think as far as the core numbers are concerned, these are a very strong set of numbers. And also, I mean, coming quickly to the asset quality. So the asset quality is also pretty strong. We were expecting the gross NPAs to still be slightly on the higher side. So I think the gross NPA ratio has also been very strong. So pretty a strong set of numbers. I also heard Abhishek mention that on the balance sheet side, the momentum has been pretty robust. The deposit growth has continued to be very strong. So I think given the fact that we have had elevated interest rates and the focus had been for a while on the term deposit side, I think there seems to have been a pretty good focus as well as momentum that ICICI Bank has built. So I would broadly say, I mean, looking at the headline numbers, I think these are pretty good set of numbers.
Okay, Ravikant, thanks a lot for that. Abhishek, you have a point to make?
Now the BB and below book, which is called the watch list of the bank, that declined to 15,355 crores, which compares to about 17,525 crores in the previous quarter. So that's a decline of almost 12.4% sequentially, and that now forms around 2.6% of the book versus 3% that you had earlier. So you have a gross slippage of around 2,779, out of which you can see that almost there's a good amount coming in. 2,170 is the reduction in BB and below book. If at all the large part of slippages have come in from BB and below, then it means that the normal slippages are much lower. That's around 600-700 crores if at all these numbers are correct, and a large part of slippages come in from the BB and watch list. So it's a strong set of numbers coming in from ICICI Bank.
Okay, so that's an important point that Abhishek is mentioning, that if the BB book and below, the exposure there is lower, the normal slippages could be around 600 crores. In fact, we also have Sanjeev Bhasin with us. Sanjeev, what do you make of the numbers?
Well, I think the numbers are a standout in the entire banking sector till now. I would say the best, and I think only State Bank we expect will beat that. There's a recovery on all account, and like we've held, we think corporate banks are going to be in the best place they've ever been in the last 5 years. Increase in net interest income, CASA ratio growth, slippages at the lowest, your recovery process is in order. I think corporate banks are just raring to go. One of the best quarters I could have seen in a long time in ICICI Bank.
Absolutely. Thanks a lot for that, Sanjeev. Prakash, you have any point to make? So Abhishek mentioned that the exposure to BB and below rated book has declined on a quarter-on-quarter basis. It was around 17,500 in the last quarter, has reduced to 15,000 crores. Do you have any reaction to that?
Yeah, so I just want to corroborate that with what I said at the beginning, that this doesn't seem to be a one-off improvement, which is what happens with a lot of these large corporate-facing banks, or is suspected to. This seems like it's a trend that's kind of set in comfortably, because you have a reduction in the watch list while the NPA numbers are low. And what has the bank done on the growth side? It's improved its NII while improving margins, incrementally. So that you cannot do if you were to just increase the book with no consequence on quality. Here they have been conscious of quality, they've grown the book as well as improved their margin. So I think they've got the formula right for whatever they've done. The repair is completely underway in terms of growth. So and banks, remember, are a leading indicator of how things shape up, which means that if this continues for another quarter, Sonal, you could probably have all corporate facing banks getting re-rated at some point in time.
Oh, absolutely, Prakash. In fact, Abhishek, you have a question to pose to our experts right now.
Prakash, what do you make of the valuations that ICICI Bank would trade, given the fact that such strong numbers were not anticipated, given we have seen loan growth actually slowing down for other banks,
but it remains between 14 to 15% for ICICI Bank.
No, so, the kind of premium that you give to an HDFC on the non-corporate side or on the general banking side, you would start expecting ICICI to also come back into that zone, Abhishek, and it lost ground because of the management issues about a year and a half back, and ever since that, it has never seen that premium. So between an Axis and a ICICI and a Yes Bank, I mean, the obvious choice is that ICICI would get valued differently, and you'll see a lot of money come out of some of the other banks and move very comfortably into that, and that itself will bring things up for the premium that it should deserve. The second thing is they don't have any dilution that's coming along. They are well capitalized, and that is also going to work to their advantage in terms of fetching a premium valuation. So I wouldn't be surprised if it actually races much ahead of Axis and the other corporate-facing banks as well.
With a provision coverage ratio of 74%, that's very strong for the bank. Won't you agree?
Absolutely. I mean, because we are used to the 60% kind of mark for most corporate-facing banks because of the size of the balance sheet being high. You can't, be very liberal with provisioning unless you're a small bank like a DCB or Federal, where it's more, it's higher. Usually tends to be higher. So for a corporate-facing bank, 74% is a comfort which is very high, and that's exactly what will add or check one more box on the premium valuation that you're talking about. And to me, the premium valuation should be at least about 30% higher from here.
Yeah, because you look at the overall loan growth, that has an impact of, the overseas book as well, which has been on a declining trend. It was at 10.7%, in the previous quarter. This time, the retail book is growing by 22%. The domestic loan growth is at 18%. There's no sign of slowdown that we can see from this number, right?
Yeah, I think it's more to do with the product mix. It's more to do with the kind of segments that they have focused on. It could be possibly, newer segments that have started contributing, and there is no large corporate lending that they have indulged in and still grown the book. So that is commendable, and I would believe that while they were underway in terms of cleaning up, they've not let their sights off the growth trajectory, and that is what a lot of other banks have done. When you are busy cleaning up, you forget about growth. Whereas this has not happened in ICICI, and that is what is showing in the numbers now.
All right, Prakash, thanks a lot for that. In fact, yes, very strong numbers coming in from ICICI Bank. In fact, Siddharth Purohit also joins us on the phone line from SMC Institutional Equities. Siddharth, what do you make of the headline numbers? The asset quality has improved, loan growth is strong, and also the NIMs have, NII growth has come in at 27%. What is your take?
Yeah, in fact, all the parameters has been quite satisfactory. I would say better than expected. And loan growth was certainly is one factor where possibly I was expecting some moderation, but they have really delivered better than expectations. If you look at last couple of quarters, during this quarter, we were expecting that because of the auto sales and all these things will impact the whole loan, but that has not happened. And the best part is that during this environment also there is an improvement in the GNP and net NPA. And as Abhishek was saying, 74% close to PCR is something really takes care of any further, if at all, slippages comes in the coming quarter. So impressive set of results.
So Siddharth, what do you think has gone right for ICICI Bank in an era where we are talking about slowdown, loan growth is slowing down for all the other banks? What do you think has ICICI Bank done right because of which the loan growth is so strong this time? Especially domestic loan growth at 18% is maybe the highest in last 13 odd quarters.
See, in fact, if you look at retail also has grown. Yes. It's not that retail has not grown, but in addition to that, it might have happened that they might have got a lot of refinancing opportunity in the corporate also, I believe. That also should have contributed to the growth. And let us not forget that ICICI is very well capitalized right now, so growth should not be a concern. So when you look at from capital point of view, they are very well capitalized. So growth should not have been a concern, and that's what is being reflecting in the numbers. So I think from all parameters, numbers are certainly good, and it looks very good to me at this point.
So what is your target price on the stock right now, and do you think this is the right time to buy the stock? Already the stock is up around 15% this year.
Yes, we had a buy rating and possibly we'll further upgrade it. We had a earlier target for 480 and probably we'll upgrade it post this result, because we feel this results is certainly encouraging for further upgradation and re-rating. That's what our take is.
Alright gentlemen, thanks a lot for joining us on CNBC TV18. Siddharth Purohit, Ravikant Bhat, Prakash Diwan, Sanjeev Bhasin and Abhishek Kothari. All of you, thanks a lot for all your expert comments. And if you are joining in late, let me tell you that the ICICI Bank results were very strong. NII growth at 27% is at a multi-quarter high. The domestic loan growth has come in at 18%. The retail book also grew by almost 22%. And the NIMs are, they have declined sequentially, but still they are at a multi-quarter high X of last quarter. They are at 3.61% as of now. The gross NPA has reduced sequentially and so has the net NPA. So all in all, it's a very strong set of numbers. The profits were a slight miss in comparison to our poll, and that is because the other income has gone down. But apart from that, very strong numbers coming in from ICICI Bank. But with that, let's slip into a short break. Please stay tuned to CNBC TV18.